This week started off with a perfect euro dollar 3% buy trade. Here's the before of the trade. Here's the after of the trade. And this trade was also called in our daily live morning call inside the community as well, which we have every day, Monday to Friday. However, on this trade, I made one mistake, which actually cost me $6,000. So in today's video, I'm not only going to be breaking down this trade because it was a perfect example of the system that I use, I'm also going to be giving you guys one more trade case study as well. And I'm going to be revealing how you can avoid the costly mistake that I made this week, which can hopefully save you guys a lot of money, right? So with that being said, let's dive right into the first trade breakdown. Yes, guys, so before we get into the trade breakdown, once again, here's proof that this trade was actually called. As you can see, this was the buy limit, and you can see over here is live price, right? So this was called beforehand. So if we head over to the charts now, and we'll break down this full trade because it was a perfect example of the system that I use. The same system I use on every single trade, following a simple and mechanical process. So if we start off here over on the daily chart, right, what we can see is that euro dollar was overall still in this bullish trend. So what I was basically seeing at the time was that price had come down, it had grabbed these previous lows and had held this area of daily demand. So once I saw this, I basically anticipated that the buyers were still in control and I was looking to long. You can also see that the daily structure was overall still bullish, right? Because price had created a higher high. I'm not really expecting longer term sells until price breaks this current trend low on the daily time frame, which is the current market structure. Recently, we've had price in this retracement phase, but I was viewing it essentially as that, just a retracement. Once I saw price reacting from this daily liquidity right here, this is kind of what originally made me want to look for some longs, because I knew that once price reacted from this liquidity and pushed up, it was likely going to head towards the opposing liquidity. Now, if we jump over to the lower time frames, this is where things become a little bit clearer. So you can see that if we actually zoom out to 4-hour chart, originally, notice how price was in this overall bearish trend, approaching that daily liquidity that price just swept down here, right? It was in this overall bearish structure, forming lower lows and lower highs. But once the liquidity was swept, we see price create this higher high. And then recently we've seen this retracement back down. So once I see this, right, this 4-hour change of character, I'm basically looking for this move lower to just be a retracement into a discount for price to then later move higher now that price has shifted back bullish. So once I saw price, sorry, I meant to be on the 4-hour here. So once I saw price push back down, it then started to react to this area of discount, right? You can see that this here, and this is a massive tip I always like to emphasize to the guys inside VIP, which is that pay particular attention to how price reacts to the last bit of liquidity before the imbalance. Notice how this is the last low before we have this imbalance. So what this basically means is that it's kind of like on a make or break zone for price, because we know that with a high probability, if price fails to hold this level, it's probably just going to go straight for the lows because there's nothing else for price to react from. So also now pay attention to how price reacts once this last bit of liquidity is swept. If we drop to the lower time frames, again, lower time frames giving us that early indication and kind of forewarning that price does indeed want to go higher. So in this particular case, we had price shift back bullish once that liquidity was taken out. We then had it retrace, hold this area of demand, which was key. And then once again, we see it continue to print this kind of bullish market structure, right? Also pay attention that price is not really reacting to anything significant to the left. So actually, we also want to mark on this next breaker structure as well, right? We've had this push down, push up. This was our new breaker structure. So as always, if I'm looking to take longs, I'm looking within the current bullish leg, which in this case is between the low and the high. And I'm looking for price to retrace down into an area of value or area of interest before looking to take longs, right? This case was also nice because we also had these equal highs that price left above. So what I was thinking is that even if price is going to flip bearish, we're probably going to see it at least head up to these highs first of all before something like this happen, right? So once again, and one of the tips I always like to mention is that we don't need to be right about market direction, because if we're using this idea of liquidity and supply and demand, we can anticipate where price is going to react from, which is enough to capitalize on our, you know, if we're looking to get a small 1 to 3 risk to reward on the trade. So for example, if price did something like this, we could have still capitalized on the buy even if price did continue lower afterwards. Now, in terms of the point of interest on this trade, if we jump to the 4-hour chart, what I was basically looking for and what I basically noticed, again, reacting to price, not trying to predict it, was if we rewind to this 4-hour candle here, this is originally what made me look for the longs in London session, is that price came down, took this 4-hour wick, you can see here, and then starts to react. So once I saw this, I knew that there was a high chance price headed for the opposing liquidity at these previous highs. You can also see as well, if we drop to the lower time frame, that this whole region here was a 30-minute demand that price previously reacted from. So I was kind of seeing this as like the first tap of the demand, which price has now come down and re-grabbed. On top of that, we also had Asia low taken at the London Open. And as always, I don't just randomly buy from these areas. I want price to show me that it wants to hold and respect this area by looking for lower time frame structure confirmations. So in this case, and as is the case with all of my trades, I'm looking for price to shift bullish on the M5 chart. I'm always using the M5 chart because that helps to keep things as simple and mechanical as possible, because on every single trade, I know basically what time frame I'm looking for the entry on. So here we can see, if we just map on the structure, price created lower lows and lower highs. But once it swept that liquidity and tapped into our POI, we have this impulsive bullish momentum coming up and price created a higher high. So in particular, this was our change of character right here. Now, one mistake I see a lot of people making in this kind of price action space is that they will over refine their entry to this area of demand, for example, right? 9 times out of 10, if price is going to continue bullish, it's not going to pull all the way back down there. And to be honest, I don't really care about getting sniper entries. I'd rather just be in the trade and, have a more kind of consistent approach to trading rather than always trying to call the exact bottoms and tops. So my particular approach is to enter on, and this is very important, the last bit of liquidity before the imbalance. So the two things I need to see for my confirmation: change of character, which we've got, plus imbalance, which we also have right here. So this trade is completely valid and I'm looking to enter on the whole imbalance. So in this particular case, if we line up the entry with this last bit of liquidity before the imbalance, stops below the low, and as always on all of my trades, I mechanically target a 1 to 3 risk to reward. That just helps to keep any of the discretion and uncertainty out of trading, and it helps to kind of eradicate any of the mistakes which creep in due to things like greed, because if you're always targeting a mechanical 1 to 3, there's not really any room for greed to creep in because you know exactly where you're targeting. So as you guys can see, this trade did actually tag us in and headed over to the upside and eventually did hit TP. However, I mentioned at the start of this video that there was a costly mistake which I made, which actually made me essentially lose out on $6,000. And the reason for this is because if this trade had hit TP, I would have made $6,000, but this trade actually missed us by spreads. So the mistake that I made on this trade was actually not adjusting my entry for spreads. And this is something that I would highly recommend to you guys, and the way you can solve and stop yourself from making this mistake like I did is to adjust your entry for spread. So when you're looking to enter on lower time frames like this, even on a pair like EURUSD, which typically has less than a 1 pip spread, sometimes it is the case that your entries are a bit too accurate because you're entering on the liquidity where price is likely to react to the pip. So in order to avoid this costly mistake, right, what I would recommend doing is just adding 1 pip onto the entry. So in this case, right, if we go over to the settings here and what we want to do is, instead of entering on this price, we want to add 1 pip to the price. So if we enter on 1636 instead of, sorry, not 1636, it would be 1627 instead. Right, this would solve the problem of us missing out on a perfectly valid trade, and we would have only had to adjust the stop loss by 1 pip, so it doesn't really ruin the risk to reward at all. Obviously, we would have then dragged the TP up a little bit higher, but as you guys see, that would have still been hit anyway, so not really too much of an issue. So, like I said, this costly mistake made me miss $6,000 this week, and that is how you can solve the problem in a very simple way. Now, guys, in trading, as I'm sure you're all aware, literally anybody can learn the theory, right? It's not really that difficult. You just kind of, like you would in school, you learn a set of rules and then you look to apply them. The hard part about trading is the actual application of the theory, which not a lot of people can do, hence the statistic of the number of people losing in the trading industry. So in this next part of the video, I wanted to show you guys one more perfect trade case study of this strategy in order to give you guys as many trade examples of the system as possible. So let's head back over to the charts and let's break down this second trade. Right guys, so for this second trade, I want to actually touch on DXY first of all, because DXY on this trade was one of my main confluences that I was using, because in all honesty, to start off the day, which was on Tuesday, the 28th of October, Eurodollar was a little bit more ambiguous and it was a little bit more difficult to read in terms of higher time frame direction. So what I did in order to clarify things was to head over to DXY, which again, it was kind of trading between supply and demand. So you could say these were like lower probability conditions, but essentially how I was reading this was price was overall technically still bearish on daily time frame, right? It was still technically respecting this daily bearish structure. But what I basically saw going into the day was that price had held this daily demand. We had this push up, and then notice how here, if we zoom in on this, price is kind of slowly creeping down, building all of this liquidity above. Now, it also tapped into this daily demand zone, which if we jump over to 4 hour, was the demand, which kind of created this change of character to the left. And one kind of perspective you could take of this, instead of this being bearish, was that this was just a sweep of liquidity into the demand for price to go higher. And once again, what made me like this was the fact that we had this very slow pullback with price building lots of liquidity above. So once I saw price tap into this area of demand, another confluence here as well is that during the London Open, we had price sweep Asia low into this region. So I was expecting some sort of reaction from this area. As with the previous trade, it didn't need to be a complete move and I didn't need to call the exact bottom, but it could have just been a small reaction for price to come lower, and I was perfectly fine with that. So if we jump back over to Eurodollar, this is basically what was happening at the time. So we had price kind of pushing higher, right? But once, if we just jump over to daily time frame first. So like with DXY, we kind of had this weird situation where it was technically still in this bullish trend, right? It still was respecting this bullish structure. But what I was looking at here in particular was the fact that we had this drawn liquidity down here with these two equal lows. So I was thinking that maybe price might want to gravitate back towards that before we see higher prices. And what kind of confirmed this for me was the fact that it was reacting to this daily supply zone, which was kind of, if you look at this internal structure, we had this kind of bearish structure forming. Price came up into this area of daily supply, wicked it, reacted to it, and then we've had this push down. Going into the week, we then had this kind of very slow, corrective and efficient pullback heading up with lots of liquidity below these lows. Originally, I had marked on this area of supply as my point of interest because this was a clear 4-hour supply, and it kind of created this 4-hour change of character as well. So one perspective you could take here is rather than this being a bullish change of character, it was just a sweep for lower prices for price to hold this daily supply. So once this area of 4-hour supply, it wasn't respected, right? But it was, once you see the high of these 4-hour supply zones or demand zones in the case of buys swept, this is where you can basically anticipate a reaction. So going into London session, notice how price had swept that 4-hour supply. We have DXY in an area of demand, and then at London Open, we saw price come up, wick out Asia high, and then you can see here it started to shift over to the downside, both on the M15 and the M5. You guys know my confirmation is always on the M5 chart, but in this case, the 15-minute and the M5 structure was the same. So I'm using here the 15-minute just for some clarity. And the actual entry that I was looking to get was after price was at this point right here, because I saw that it had created this 15-minute supply, which was induced by this wick. So at this point, I set a limit on this area with stops above the high. I think we had a 7 pip SL, and then I, as always, mechanically targeted a 1 to 3 risk to reward. And let me just show you guys that we did actually just take this trade as well. If we go down here, originally I was looking to sell pound US dollar, but it never pulled back for us. But yeah, here was the limit, right? Quick disclosure on this trade, I did actually decide to make this one break even, so I'm not going to count it as a valid trade, and I didn't actually make any money on this trade because I made it break even, which price later came up and tapped. But I thought I would show you guys this trade because it was perfect nevertheless. So as you guys can see, it did eventually come up, wick out that inducement, came back up and tapped break even here, and then melted over to the downside as you guys can see. So that was the perfect second trade case study. As I said, guys, very simple mechanical strategy. I literally do 30 minutes or so of analysis in our daily live call with the community in the morning, and that's basically all the trading I do. I set alerts at my zones, monitor price in my zones. If the entry presents, I take a trade. If it doesn't, I don't take a trade. And as I said, guys, the first euro dollar trade that we just broke down was called in our daily live morning call with the community, which we have every single day, Monday to Friday. We also do live back testing every single weekend as well, along with the Sunday market forecast. So if you want to partake in these daily live calls, I'll drop a link in the description. If you want to see more trade examples of how this strategy works, I recently back tested gold over an entire year's worth of price action. So I'll pop the playlist somewhere up here on the screen. Thank you guys for watching. I will catch you in the next one.